Good morning, ladies and gentlemen, and welcome to the RBG Holdings PLC interim results presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of the screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your InvestorMeetCompany dashboard. I would also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Nicola Forstone, CEO, and Robert Parker, CFO of RBG Holdings PLC. Good morning.
Good morning, and thanks everyone for joining us this morning on the announcement of our interim results to the 30th of June 2020. Just a brief overview of the company today. When we presented our interim results to the 30th of June 2019, we were predominantly a legal services business, and our results, when you look at our comparatives, therefore contain only RBL's performance up to 2019. Since then, we have morphed truly into a group that now comprises Convex Capital, a sell-side M&A business that only does sell-side deals, and we have launched Lionfish Litigation Finance, which invests in third-party litigation finance via solicitors that are not RBL. To date, we have only been able to invest in our own litigation where the client is our client and we are on the record as part of that litigation. We have deliberately launched a separate company that is differently branded in order that we can market and sell to other law firms within the jurisdiction. And I will talk a bit more later about how that has developed. When you come to look at our results for the first 6 months of 2020, it had been our strategy in acquiring Convex to use the cash generation of that high margin business to underpin the launch of Lionfish Litigation Finance, which inevitably would need investment prior to delivering on its returns on its investment as we move through into Q4 2020 and into 2021. Obviously, the pandemic put paid to a little bit of that, delaying Convex's delivery of those deals and that cash generation. However, in the period, we remain profitable, and Robert in his presentation will draw on the fact that RBL itself has probably had its best half year in its history, delivering 3.8 million of EBITDA contribution to the group's EBITDA, but we have obviously carried an investment in both Convex and Lionfish as we had intended to do so. When the pandemic hit, we took a strategic decision to maintain the majority of the cost base in Convex in order to keep a team together that have worked together for over 10 years, so that we could very quickly exploit the opportunities that would result post-lockdown. And we are seeing, since then, a return of considerable M&A activity. Convex were the first to return to their offices and the first to have client meetings in our London offices. So we have strong expectations of delivery of those, some of those deals in Q4 2020. So where are we against the strategy that we outlined at the time of our IPO? We wanted to grow the performance of the legal business, strategically always remaining high margin with a target revenue per fee earner of £500,000. We came within shouting distance of that, and the business itself has had the strongest utilizations and realizations, as I say, than it has in its history. A large part of that is down to the fact that there is increased workflows and not simply the fact that they're working from home, where although we are seeing increased utilization, the working from home has not had a material impact on those utilizations. If we look at the launch of Lionfish Litigation Finance, that took place as we planned in May, and as a result, we have not had any realizations of any investments and obviously any de-risking of any investments in the first half of the year. With Convex, we only had a couple of deals that were exposed to the leisure or retail market, which were cancelled. The majority of the pipeline is in other sectors unaffected by the pandemic. And the delay in the transactions of those deals was down to the fact that you could not have face-to-face meetings. So we're comfortable that we are delivering on our strategy, and the delay in Convex's delivery of its deals has simply set us back 6 months against our original strategy. Turning to Lionfish specifically, we headhunted industry expert Tetsu Ishikawa from Akasta Capital, and I would consider him one of the best fund managers in this business. We both share a view that litigation finance should be managed differently to how it has traditionally unfolded in the last decade since it was available in the UK. It's traditionally run like a fund, where funds raise money, sit on money, charge fees on money, and then seek to deploy that money and are under pressure to both deploy it and also to get returns on those investments in a very short period of time. That doesn't fit with the model of litigation investments, and we choose to pull down money, de-risk our investments when we want to recycle our transactions, and that therefore we're under no pressure to do a transaction that is appropriate or is right for us, or we don't believe is a good case. And that is where Tetsu and I believe the future of litigation funding lies. Up to the 15th of September, we had 112 inquiries. We have 23 cases under active review. We've approved 6 and executed 3 transactions, delivering a commitment of 2.4 million with £700,000 drawn down to date. Our long-term ambitions for the business are not only to scale it materially, being able to take advantage of the huge number of opportunities that we see, but also to create a secondary market in these investments that enables us to trade them and other investors to trade them. And therefore we are less reliant on the need to recycle cases within timeframes. As courts get busier, and UK is known to have a very fast court system compared to other jurisdictions, it is nevertheless slow compared to other business sectors. And therefore we do want to be able to give our investors the opportunity to recycle investments if we're on a case that has a long-term duration. So the revenue, including no realised gains of 12 million, is up 17% on 2019's results. It's important to note that in 2019, our revenue of 10.2 million, which came entirely from RBL Limited, included 2 million of realised gains. EBITDA is at 2.6 million, 22% of revenue. 3.8 million in 2019 included 2 million of realised gains. Therefore, the actual results of the RBL law firm last year were 1.8 million, and this year they are 3.8 million, showing the huge performance that they have delivered in 2020 to date. This has largely come from the turnaround in the corporate division. You may recall that corporate suffered enormously in the lead up to Brexit in 2019, and we have seen a 330% improvement in the corporate revenues in the period. Profit before tax of 1.4 million at 12% of revenue. As you can see, our margins are impacted by the fall off in revenue from the higher margin businesses and from realised gains, which is also high margin. We expect this to correct when we get to the full year results. We've got Robert back yet?
No, he's we're trying to get him to dial in. I think he has broadband issues currently. So if I may hand the floor back to you, please.
So net debt of 1.6 million at the half year. We do have a £10 million revolving credit facility, which we have fully drawn down, which many companies did at the time of the crisis, of which we are only currently using 1.6 million, earnings per share at 1.35. The dividend decision was to defer the decision. The decision has not been deferred as long as the 2020 results, which would be April next year. We have merely deferred the decision to see what the Q4 results will be, and we will be looking to make a decision on the dividend in very early 2020 when we have complete visibility on the 2020 results. I have been asked, before we go on to the income statement, how I allocate capital resources with regard to the dividend and the fact that Lionfish requires cash for investment. Our dividend is a commitment to the market of a distribution of our profits at 60%. And therefore, we always cash flow our dividend, and it takes priority ahead of our other capital allocations, and that will not change. If we turn to the income statement, our revenue and realised gains, which I said is up 17%. If we look at our overhead and whether we've always said that in the time of recession, we would be able to flex our overhead if revenues were downturned. Now we have chosen, yes, to restructure Convex when the revenue clearly was going to be delayed, but we took a strategic decision to maintain 80% of the team, many of whom took cuts in their own pay in order to keep the team together and to be committed to delivering on Convex's aspirations in the years to come. But we did take a decision that we would cover an overhead during this year in order that we had a strong platform to take advantage of the deals that were there in the pipeline as lockdown eased. And this is now paying dividends, as we will see in the final quarter of the year. We also have increased contractor costs because, as we said at the time of the float, we ran an hourglass shape. It's in our appendix of our presentation. So as our revenue increased with RBL, we have brought on more contractors to do that. So whilst that's revenue generating and there is a good margin on those contractors, it is not as high a margin as we have on our own salary overhead. Other operating costs, which are outlined in the presentation, reflect insurances, which did go up. Many professional services firms saw insurance increase during the pandemic. The insurance market being somewhat of a meltdown, as we describe it, as to how what sort of pain level they're going to see in the year ahead following the pandemic.
Nicola, we do have Robert back in the room. Robert, are you with us, sir, please? Robert, could you can you hear us, please, Robert? Robert, I've unmuted your microphone. You should be free to speak. I do apologise, Nicola. If I could hand back to you, I'm going to get Robert to dial in now.
So carrying on with the income statement, profit before tax, as I said, is 1.4, and we have continued to operate very tight controls over the group's operating expenses. But we also have an investment in Lionfish, which was planned strategically for 2020 as we launched that new business. Turning to the cash flow, we will see that there has been an increase in trade and other receivables. One of the focuses of that business is obviously cash flow, and to ensure that we do not allow the debtor days and the WIP lockup days to be extended. We have seen an extension in those days, but those have been over fixed fee arrangements that we believe were good and have proven to be so in the second half of the year. So we were comfortable that this was a short-term position and that our debtor days will reduce back to the normal levels by the beginning of next year. We operate very strong policies over our debtors. We take money on account from our clients upfront, especially if they're new clients, and if we think that they are financially impacted by COVID, we have also asked for money on account before commencing work. Our investment in litigation assets at the half year is 1.6 million. Dividends were 800,000. As I said, we've drawn down the 10 million RCF. Turning to the balance sheet now, the main point to bring out on the balance sheet, which is do we have Robert?
Yes, Nikki, I'm here now.
Balance sheet is all yours.
Okay, sorry about that. Surprisingly enough, I had network problems. So if it just highlight the balance sheet, I think it's good to pull out some specific things. So as Nikki's probably highlighted, that we're not comparing like with like in the two periods because of the group perspective, but trade and other receivables, the significant part of that is debtors. So we have 6.7 million in debtors, 3.7 million in WIP, and 2.9 million in other receivables. Our debtors, as Nikki's probably highlighted in the previous slide, our debtors days are very well managed. We believe we're at 49 debtor days, and in comparison to the same period last year of 45. I wanted to highlight that, as we've highlighted, RBL business compared to last year, 11.7 million to 8.2 million. In the month of June, we had the biggest income month of the business, I believe. since the history of the business. So we billed 3.7 million in the month of June. So you see our trade and other receivables, you see debtors at 6.7, then 3.7 million, and that was a current debtor billed in June. Moving through the rest of the business, we talk about net debt. During last year, we set up an RCF facility for 10 million. We're a bit old school. As we went into the pandemic, we drew that facility. So we've used around 1.6 million of that facility. At the moment, we have the cash in our bank, or the 8.4 million. Moving through the rest of the balance sheet, we have 34.7 million in intangibles. 33 million of that is goodwill, which is tied up in the two acquisitions. That's RBL, the Rosenblatt Partnership, and Convex. So having reviewed this and what we see with the potential that's coming through in the next quarter and what we see next year, we are still holding these values within our balance sheet, and we think they're true. We have trade and other payables. Within the trade and other payables, there is 4 million, which is related to the earnout. And I think possibly Nikki would talk a little bit about how we potentially need to restructure that earnout in order to maintain the momentum with Convex as we move forward. So I think that's my only bit, sorry, and I do apologise. I seem to have just taken one slide. Thanks, Nikki.
Thank you. So just to summarise where I feel the group sits today, I'm very pleased with the half-year results. We had obviously a great deal of concern, as all companies did going into the pandemic, what impact that would have. We have seen across the legal sector actually an increase in activity and client work, and we are at our busiest within that business than we have ever been. We feel comfortable that as it's the heartbeat of our business, it underwrites everything that we do, and we are then able to benefit from the more transactional businesses of both Convex and Lionfish. We therefore are, as we always are, cautiously optimistic. I would say I'm a little bit more optimistic than cautiously, but we feel comfortable that we will deliver a solid set of results in 2020. And as long as business continues and the economy continues on the basis that it currently is, we feel very comfortable. As is well known, litigation increases at the time of crisis, and we think this time will be no different. So if there is a material economic downturn, then we do think that the litigation business will be well placed to benefit from that, as Rosenblatt itself will also be well placed to benefit from that. There is no question that there is a considerable amount of money moving into the litigation investment market, looking for yield and returns, because as you yourself will know as retail investors, there are not many places to get good returns. And that remains the case for the M&A business as well. Private equity money is strong, looking for deals and looking for good deals from companies that are strong. And therefore, I remain very positive that we as a group are well placed with different abilities that we now hold internally to benefit from what is to come. Many thanks for your attention.
That's great. Thank you very much, Nicola. Thank you very much, Robert. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few minutes to review some of those questions that have come in, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the InvestorMeetCompany platform. Lastly, before I hand back to Nicola and Robert, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you will be redirected for that opportunity to provide feedback. Nicola, Robert, just a couple of questions that we've had in for investors. If I could just perhaps pose some of these, if that's okay.
Yes.
Right, the first one here we've got, what are the two key things that will drive earnings over the next 5 years, and how much do you anticipate? And what are the two main threats, risks to achieving this?
The main drive to earnings growth will be the delivery of Convex and Lionfish on their strategic plans. And obviously the risk to that are simply the uncertainty around the economic response to the pandemic and whether that will delay it. I don't consider that it will change it, more than it will delay it. Robert, do you want to follow up on that?
No, I agree with you. Look, Nikki, structured and the strategy of this business is that RBL was the first acquisition. and that's the everyday engine of this business, generating revenue on a monthly heartbeat and profits. And then the acquisition of Convex was to deliver, he says, transactional revenues and profits as we go through the period. And then we leverage off the asset, which is RBL, to use Lionfish to pick the required assets to deliver significant return as we move forward with those investments. I think that's what the strategy was set up to do, and it seems to be playing out as we expected.
That's great. Thank you very much indeed. Next one we've got here. I would appreciate hearing your thoughts regarding the potential impact of the recent published litigation against your firm.
Yeah, so they're referring to a litigation which is GEHC versus Winross. It is not against this business and against the firm. The litigation is against the former firm of Rosenblatt, whose name is now Winross. Many people do not appreciate that Rosenblatt Solicitors was a partnership, and you cannot IPO a partnership. And therefore, when I joined, I set up a NewCo business that acquired the assets out of that business, and I floated a new vehicle. And therefore, we do not have litigation against us, nor are we funding any litigation, nor are we responsible for any payouts that are due under that litigation should that transpire.
Fantastic. Thank you very much, Nicola. Another one here. How does RBG explain to shareholders what they've done with Global Energy Horizons Corp?
It's exactly the same question I've just answered, actually.
Okay.
Yes. Global Energy Horizons, GHC, have challenged CFAs, and they're actually challenging the enforceability of CFAs in general. So this is actually a point of law, and is being fought by a former firm, not by us.
Fantastic. Thank you very much. Also, we've had a few questions in just on the live meeting. I don't know if you have a moment just to have a little scan through there and see if there's anything you could possibly answer for investors.
So the first question is, what about the 6 million payment to Convex meant to have been paid today? That was a deferred consideration on an earn-out. Obviously, the earn-out has been missed and the deferred consideration will not be paid. However, it's very important to motivate the team to deliver on the aspirations of that acquisition. And therefore, we are in the process of re-incentivizing management through a variation of the SPA and the earn-out to be put in place for 2021. And any deferred consideration will only be paid upon the delivery of the performance.
Fantastic, thank you.
And what distinguishes your company from others in the sector? I think the primary difference, which is always quite subtle and difficult to appreciate, is that we are the only professional legal services group that also funds and participates in litigation finance as a business. Many other law firms talk about doing it, but actually all they do is either tie up with a litigation funder externally, which means nothing, or they underwrite their work in progress and do some work for free or work at risk, as we do, as RBL does. But we're the only one that actually puts hard cash into cases, and we're the only one that de-risks that by selling down. And we remain also the only professional services listed entity that is run by commercial management that have not previously been in professional services. So I am the only non-accountant, non-lawyer running one of these businesses. To what extent are we aiming to grow our partner base, given that we're close to our max target of 0.5 million per partner? It's per fee earner that the revenue is per fee earner per partner. We would be targeting closer to 1 million per partner. We are looking to grow our fee earner base, but we do it in a very strategic way in order to ensure that we can maintain our margins. So the decision to bring on a permanent salary versus a contractor is one that we take quite seriously, and we only do so when we believe that fee earner will deliver new revenue that we do not currently enjoy. Robert, do you have anything you want to add to that?
No, not at all. And you're right, Nikki. It's a very commercial decision. So the performance management of the new partners coming in is on a monthly basis. So I think what we see across the industry, that a lot of people promise to deliver significant revenue. I think it is apparent that some of the contracts are 2 years in order for them to buy in. I think we take quite a commercial perspective of it. We go through their business plans, but they are performance managed on a month basis in order to make sure that they're delivering what is being promised. So I think I take Nikki's point around the commercial managers. It is treated as every business, basically everyday business. So possibly we don't look at it as a professional services person would look at the business, but we look at it as just a general trading business.
That's great. Thank you very much indeed, Robert. I think that kind of concludes the questions that you guys can address. So thank you very much for that. And of course, any other questions that come through, the company will review all questions submitted by investors today and publish responses where appropriate to do so via the InvestorMeetCompany dashboard. Nicola, perhaps I could just ask you just to wrap up before I redirect investors to give you some feedback, please.
We've missed some questions there. Is that deliberate?
Sorry, no, they've just come through. If you're happy to answer them, then please do go ahead.
Of course. This will be for Robert, but I'll read it for him. Please comment on spread of debtor exposure between debtor entities and what level of concentrated exposure do RBG have to individual large-scale debtors and are different risk ratings applied to each?
Yeah, the debtor exposure is in RBL. That is there. As I highlighted in the presentation, we've got 6.7 million in debtors. Our debtor days are 49 days. I would question whether any other law firm has the same debtor days that we have. And the reason our exposure is probably a little less than a full service audit legal business is that dispute resolution, we've got a monthly heartbeat with that side of the business, which is a significant contributor. It gets billed monthly and it gets collected monthly as well. Unlike the transactional side of legal services businesses where they're billed at the end of the transaction. What we've tried to introduce, and Nikki introduced this when she joined the business 2 years ago, there is a monthly heartbeat. We drive on debtors, and it's a little bit easier when you've got 27 litigators sat above your office to actually carry through with the threat of, I will take you legal. We don't do that. We've got a very good credit control unit that drives that cash collection. And we've got a business within RBL that now fully appreciates that cash is a driver in a business and it's just not about billings. So I think that the success of that is Nikki's. When she took the business on, she brought commercial drivers into the business and they are still ever present in the business and driven on a monthly basis.
So there is one other question as well, which is, are there new partners or fee earners that you have targeted who have turned you down, and if so, why? No, generally speaking, and this has been my experience when I was running RBL very hands-on in the early days, this market works heavily through headhunters and recruitment agencies. And I think that's because lawyers like to have somebody to talk to and can interact with before they're actually interacting with a potential target. So most of our work is targeted through them, and we have that interface. We haven't gone after any specific fee earners of ourselves that we've identified. We have always generally worked through the recruitment network because lawyers do not like the direct approach. It generally backfires on you, and often because the only way to approach them is via their own law firm that they're currently at. So that doesn't generally work. And we have never made an offer that has been turned down. We have had a couple of situations where partners have withdrawn from a process, which when we've been partly with through the recruitment process, and that will be because their financial aspirations for what they think they're worth, obviously, is different to ours. And many times we've had partners who think that they should be able to work for a couple of years without any performance criteria and earn a salary during that time if they've not performed. And that's something that we simply won't do. So we have never met, and some other law firms will do that. We won't do that. And it's the only time that we've ever pulled out of a recruitment process with a potential partner.
Fantastic. Thank you, Nicola. I think you've actually covered everything off there. So thank you very much for that. If you just have a couple of words just to wrap up, that'd be fantastic. And then we can redirect investors for feedback, please.
Yes, just wanted to thank everybody really for taking the effort to join us on this rather bland medium. and very much hope that we'll have the opportunity to go back to our in-person retail investor presentations for the results in 2020, our 2020 results in 2021.
Fantastic. That's great. Thank you very much both for updating investors today. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If you access the meeting from our website, the feedback page will appear in front of you. If you access it via the link, you'll be asked to log in. It will take just a couple of seconds to come through. On behalf of RBG Holdings PLC Investor Meet Company, we'd like to thank you for attending today's presentation. That concludes today's event. Thank you very much indeed.